I'm Nima Rajan, and this is Forum Daily Week in Review. The annual pace of inflation rose in April for the first time since its peak last June, according to Statistics Canada. The agency is reporting that inflation rose 4.4% in April, in part because of a 28.5% jump in mortgage costs. The Consumer Price Index was up 4.4% compared with a year ago, up from a year-over-year increase of 4.3% in March. And Canadians may be feeling the increase in inflation, as StatsCan is reporting that the cost of rent has risen 6.1% from a year ago. Meanwhile, groceries are up 9.1%. Well, joining us now to further discuss the impact of these numbers is Dr. Moshe Lander, economist and professor at Concordia University. Dr. Lander, welcome back to Forum Daily.
Hello.
So as we mentioned, this is the first increase in inflation since last June. What were the main causes found behind this reading?
It's exactly the items that you said, and it's been the culprits all along. We're talking about rent, we're talking about energy, and we're talking about food. So they've been the things that have consistently been above average. They are still above average, and they're pulling the numbers a little bit higher than what was expected.
And we know financial analysts were expecting the inflation rate to be lower, coming in at 4.1%, but it rose to 4.4%. So how are economists reacting to this increase?
Calmly. And I think that's the way that all of us should be taking it. The difference between 4.1 and 4.4 is really small. I know we can do the math and say that that's 0.3 percentage points, but the fact is that the trend is still clear. It's come down from 8.1. It's supposed to be down to 3 soon enough. This is just a blip on the way.
Oh, and on that note, we mentioned the Bank of Canada expects inflation to settle at around 3% this summer. And are we still heading in that direction, Dr. Lander?
In the direction, yes. I never really believed the Bank of Canada, not to say that their credibility is at stake here, but I thought that the 3% target was a little optimistic to hit this summer. But certainly by the fall, the end of this calendar year, we should be at that 3%, and we should enter into the 2% range early in 2024. I don't think that this number is going to change that path any.
So what do these numbers mean for the Bank of Canada's push to control inflation and, I guess more importantly, its interest rate pause?
So I don't think that we're going to see a change in their behavior here. The Bank of Canada meets in a couple of weeks. They're probably going to keep interest rates on hold. They're going to say that they're going to continue to watch what's going on. They're going to ask us to be vigilant. They're going to be nervous about things like PSAC strikes and possible WestJet strikes among the pilots and what that could mean for wage inflation. But assuming that nothing surprising comes up, they're okay with this. Nobody said that it was going to be a smooth run from 8.1 down to 2.0.
All right, Dr. Lander, so is there any chance of any more interest rate hikes on the horizon? And if so, what could they potentially look like?
There's always a chance that interest rates could go up. So nobody should rest easy, but it's very unlikely. If it were to happen, it's probably 25 basis points. If let's say that next month's number is, say, also 4 point something percent, if we see that these unions are flexing their muscle and they're negotiating above average wage increases, then the bank might need to nudge that interest rate just to say, hey, I told you we're trying to bring inflation down here and you're not doing your part. But if we don't see any sort of big jump, if we see that this is just a blip, the Bank of Canada probably doesn't need to do anything.
And taking all these stipulations into account, what is the likeliness of inflation continuing to increase if no steps are taken by the Bank of Canada just yet?
So the underlying causes are kind of one-offs here. That 28.5% jump that you said in mortgages or in housing costs, that's a lot of people. When they reset their mortgage, they're going to go from 0.5 percentage point to 5 percentage points on their mortgage. But that's a one-off. And so once they've done it, they're locked in for the next 3 years, 5 years. And so they're not going to see any sort of inflation anymore. So, the trend is still down. This is just a blip. And I think that these one-offs that are driving it this month are not going to be one-offs next month.
And for a bit of a broader perspective, what could this mean for the Canadian economy overall, these numbers?
Every time that you and I talk, the word that we keep using is resilient. The economy just keeps managing to chug along. We might see a recession, but I've said since last year that if we do have a recession this year, it'll be very mild. It would be very short. And the fact is that here we are entering into the middle of 2023, and we're not in a recession yet. So if there is an economic downturn coming, if there is something that's going to tip the economy, again, there's a little bit of space here to negotiate. The labor market's still strong and doing well. I don't see that there's any real concerns for the economy at this point.
All right, Dr. Lander, thank you again for joining us today on Forum Daily.
Anytime.
All right, up next, we're going to take a look at a report from the Canadian Real Estate Association. It found national home sales rose between March and April, but were down 19.5% from last year. Our interview with Mr. Sean Cathcart up next. Stay with us. Home sales jumped 11.3% between March and April as the Canadian real estate market picked up again. But the Canadian Real Estate Association says the number of homes sold last month was down 19.5% from last year's levels to just over 44,000. CREA reports that supply is still at a 20-year low, and the average price of a home fell 3.9% from April of last year. Joining us now to tell us more about the state of Canada's real estate market is Mr. Sean Cathcart, senior economist at the Canadian Real Estate Association. Mr. Cathcart, welcome back to Forum Daily.
Thanks for having me back.
So as we mentioned, your latest release highlights an 11.3% pickup in sales. What markets in particular have been seeing this increase in activity?
Over the last few months, it's really been Toronto, Vancouver leading the way a little bit. But I think more generally, I'd say we're seeing it all over the place. It's not as if anywhere is not showing this kind of, on some level, behavior. And in particular, that April gain, go back 20 years, there's only a couple other times coming out of COVID and coming out of the financial crisis that we saw an increase bigger than that. So, it's really all markets are sort of pulling in the same direction and subject to the same sort of influences right now.
Sounds like some good news when it comes to market activity. Now, what were found to be the main causes behind this increase in sales?
So we've had this rebound baked into our forecast since last year. And what I've been writing in that all along is it's only a matter of timing that was in question about when it would happen. Would we miss the spring market and then 2023 is a bit of a dud year, or does it kick off the way it just did? And the two milestones that I had identified back then was the Bank of Canada has to make it clear to consumers generally, not just to analysts like us, that they're done raising rates or almost done, that they're not going to do another 400 basis points and put you out on the street if you go and take a mortgage right now. And the second one was home prices have to stop falling because people waiting on the fence, thinking maybe we'll jump in, do not want to buy a house that is worth $25,000 less by the time they get the keys, right? And so we hit that last milestone last month with home prices stopping falling on a month-over-month basis. And we saw people after the Easter weekend just come flooding into the market. I expect even bigger numbers in May.
All right. Now, since we're talking about home prices, let's unpack a little bit about that. So as you mentioned, some do believe that home prices may have bottomed out in recent months, but others, like the Canada Mortgage and Housing Corporation, now they're predicting some more declines in terms of year-over-year home prices in 2023. Can you tell us a little bit more about where CREA stands when it comes to prices in particular?
Sure. I guess it depends on how you want to measure that. Like, will there be more year-over-year declines going forward? For sure. We are not going to get back to where we were a year ago in the space of a few months. But typically, when you talk about a bottom, you'd be talking about month to month. So what was the lowest point? If you're looking at the average home price, we hit that in January, and we're already up over $100,000 above that. Now, that's mostly because there's a lot more expensive sales happening once again in Toronto and Vancouver, which drives up the average. But it's also, as of last month, because prices of actual homes are rising again. And so if you measure it by the MLS Home Price Index, which is our index, which is really the best measure, the bottom was basically February, March, and we're now heading back up. And that, home prices being up 1.6% month over month from March to April, that's a big increase. That's not a little green shoot here. That's like, other than the pandemic, there's not a lot stronger than that. So I think it's really taken off again.
All right. Now, in terms of supply, we mentioned that it's at a 20-year low. How do you see this impacting prices and sales in the near future?
Well, it's weird. New listings every month really fell off a cliff starting last fall. They weren't very low 6 months ago, but they really just fell off. I don't know if that's because people said, this isn't a great time to buy. And so the hope would be that now they're going to look and say, oh, it is, a good time to sell. That is, the hope would be that some of them go, oh, maybe it is now. Certainly homes are selling way faster. We're actually getting really close to where I think that listings are going to start to have an offer day on them again, because they're going to be expecting multiple offers. So the real challenge, though, for a seller is not to sell your home. It's where you're going to move to. Existing owners need to find somewhere else to move to first. I think a lot of them jumped off the fence in late April. And I'm seeing in the first 2 weeks of May, and this is a positive sign, new listings finally picking up, which is, so you can imagine the move-up buyer who jumps into the market in April and finally grabs that big detached home because they got teenagers now and all the rest of it. Well, right now, they're listing that bungalow for sale, and now somebody else can buy that. And then maybe that buyer has a townhome, and then they list that. And so that's where you get that sort of virtuous circle as this moves forward throughout the year, that hopefully in the end of it all, frees up some sort of starter home type homes for first-time buyers as well.
All right, sounds like things are going to continue to pick up. Mr. Cathcart, thank you again for joining us today on Forum Daily.
My pleasure.
Well, when it comes to investing, many Canadians may think of the Toronto Stock Exchange, but not everyone may be aware of another option, the Canadian Securities Exchange, or CSE. Now, according to its website, the CSE began operations with an aim to provide a modern and efficient alternative for companies looking to access the Canadian public markets. The CSE is operated by CNSX Markets Incorporated, and it was recognized as a stock exchange in 2004. Well, with us now to highlight the CSE and its role in Canada's economy is Brendan Caldwell, Director of Caldwell Securities Limited. Brendan is also on the board of the CSE and is a major investor through Client Holdings. He joins us now. Brendan, welcome back to Forum Daily.
Thank you, Nima, and thank you for the disclaimer. It saves me the trouble.
Definitely, Brendan. Now, as we mentioned, investors have heard of the Toronto Stock Exchange, but they might not be aware of the Canadian Securities Exchange, or CSE. So what exactly is the CSE?
Well, for the last 19 years, the CSE has been a competitor to the Toronto Venture Exchange, or the TSX Venture Exchange, which was set up to make it easier for entrepreneurial companies, smaller companies to get listed. Well, the CSE for the last 19 years has actually been a major competitor in that venture area, and where it started out doing oil and gas and mining exploration companies, branched out now into technology, Bitcoin and blockchain related companies. It's developed a major market in cannabis, and even in psychedelic related companies. So it's doing the leading edge as well as the basic industries that Canada is famous for.
And how much of an impact has it had on the Canadian economy so far?
Well, it's been big. If you take the cannabis sector alone, a study by Deloitte a year or so ago said that I think between 2018 and 2021, cannabis sector added something like $50 billion to Canada's GDP. And the Canadian Securities Exchange is the leading listings venue in the world for cannabis stocks. My kids joke, I don't know what cannabis looks like. I've never used this stuff. They suggest maybe I could do with a gummy or two, but it has been a major industry, and the TSX, for whatever reason, decided it didn't want to list cannabis companies that had any exposure into the U.S. I suppose the realistic reason was that, at least federally, cannabis is still illegal in the U.S. So that all these companies got listed on Canada, on the CSX and CSE, I should say, and it's been a huge boon to the Canadian economy, just that one sector alone.
Quite the sector indeed. Now, why is the CSE important to entrepreneurs in particular, Brendan?
Well, really since the tech wreck in the early 2000s and the financial crisis, rules upon rules and have been laden upon public companies to make it very difficult for them to go public. And there's been even increasing amount of suspicion about public companies and made it very, very difficult, particularly in the US, but also here in Canada, to become a public company. The CSE has tried to streamline that process and make it easier. As the former CSE chairman was fond of saying, we have a secret strategy. We're nice to our customers. And it has meant that, say, in the mining sector, with metal prices going so high and the need for, particularly some of the rare earths metals, to actually get out of the ground in a jurisdiction that's less unfriendly to the West than some of the places it comes from. Anyway, helping these companies get on track and get public and raise money quicker is going to be a major factor, not just for the Canadian economy and Canadian stock markets, but also for the effort to move toward green technology.
Definitely, Brendan. Now, just about a minute left here, but we spoke about the cannabis sector. Would you be able to share with us some of the other companies that are listed on the CSE?
Well, again, I alluded to the mining sector, and what's happening now is that in the old days of Canadian mining, they would be so-called greenfield exploration, where they didn't know where the metals were. These companies would raise money hoping they'd find something. But what's happening now, and what the CSE is doing at the moment, is allowing public companies to get listed and raise money. But unlike those greenfield explorations, they already know where the metals are. They actually, because in the old days, the prices for both rare earths and basic industrial metals were not high enough to justify mining. But now, with the very a very quick, relatively amount of work, they can prove up the reserves in those properties and get production going sooner than might have been in the past. So the CSE makes that securities fundraising process much easier, and again helps the economy, and particularly toward green initiatives has been a real boon.
All right, Brendan, always great having you on Forum Daily. Thank you again for your time today.
Thank you, Nima.
Leaders of the Group of 7 countries are beginning their 49th annual summit on Friday, and Japan is hosting this year. The meeting comes as the G7 warns that the international community is at a historic turning point. Talks are set to focus on 7 main issues: regional affairs, nuclear disarmament and non-proliferation, economic resilience and security, climate and energy, food, health and development. Well, joining us now to discuss what to watch for at this year's G7 summit and what Canadians can expect from the talks is Dr. Ella Kokatsis, the Director of Accountability at the G7 Research Group at the University of Toronto. Dr. Kokatsis, welcome to Forum Daily.
Thanks, Nima. It's a pleasure to be with you. Thanks for having me.
So as we mentioned, the G7 summit is draped on the background that the international community is at a historic turning point. So what in particular makes this summit stand out compared to others?
Nima, I think what makes this particular G7 significant is that leaders are really confronting 2 critical existential threats. The first threat is that, of course, of nuclear weapons proliferation, arising not only from Russia's invasion of Ukraine, but also Iran's drive to acquire nuclear weapons and nuclear-armed North Korea, which is threatening its neighbors, and also China with its military exercises around Taiwan. And of course, the second major threat is that of climate change, as global temperatures approach a critical tipping point. So the G7, I think, are going to be heavily focused on how they can accelerate their own pathways towards net zero by 2050, or preferably before then, by making those significant advances that they need to make in order to advance the green energy transition.
Now, as you say, Russia's invasion of Ukraine is set to be top of mind for most of, or if not all, leaders. But Japanese Prime Minister Fumio Kishida, who's going to be chairing this year's meeting, he's likely going to use the opportunity to highlight tensions in the Indo-Pacific, including moves by North Korea, as you say, growing its nuclear arsenal, and China encroaching in the Indo-Pacific. How do you see these issues being unpacked at the G7 in terms of priority?
Yeah, indeed, you're absolutely right. Japan's Prime Minister Kishida will use the opportunity of hosting the G7 to rally continued support for Ukraine. But Japan is also going to be looking to the other leaders to galvanize support and recognition of its own security concerns in the Indo-Pacific region. And this is largely because Japan now faces a very different security environment than it did even a decade ago. North Korea's accumulation of ballistic missiles has put Japan at risk. And of course, Beijing's accelerated military buildup has also raised serious concerns in Tokyo, as Japan's waters and airspace are routinely challenged by Chinese forces. And Japan is also watching very closely this developing China-Russia axis to determine what implications it's going to have for Japan's security. So certainly that's going to be a very critical issue for Japan this year as it hosts the summit.
And in terms of moves against Russia in particular, we know leaders are expected to tighten sanctions on Russia at the summit, particularly aimed at energy and exports. So what might these measures look like?
Well, the G7 are likely to agree to keep reducing Russian energy imports, first off, and create mechanisms that are going to trace the export of certain Russian products, including, for example, diamonds or other minerals. The leaders, I think, are also going to try to close certain loopholes that currently exist that allow some non-G7 countries to access and then re-export those goods and technology back to Russia. Now, we've heard about a U.S. proposal to replace the existing sector-by-sector sanctions with a full export ban. Some exemptions, though, would include agriculture and medical products, but there are some G7 countries that may oppose this approach. But certainly, I do expect to see tightened Russian sanctions in the leaders' final outcome document, absolutely.
All right, Dr. Koukatsis, just over a minute left here, but another major goal at this meeting is outreach to the global south, especially amid China's growing influence in these nations. So can you tell us a little bit more about that and why this is a key priority and how the G7 nations are likely to tackle this issue?
Sure. Japan's prime minister is pursuing deeper cooperation with the global south, and I think his intentions seem to be clear: to convince leaders in the global south that the G7 is relevant, it is committed to the rule of law, and it can serve as a viable alternative to economic cooperation with China, particularly in areas of energy, tech, cybersecurity, innovation, and financing for these mega projects. So Japan has effectively positioned itself as this bridge, so to speak, between the G7 and the global south. And it's going to continue to advocate on those policies to bring the global south into closer cooperation relations with the G7 summit this year.
All right, Dr. Koukatsis, we've got a quick 30 seconds left here, but what are you watching from the Canadian delegation at this meeting?
Well, I think the Prime Minister is certainly going to be very focused on continued support for Ukraine, where Zelensky is set to address world leaders again once again by video link, as well as economic and energy security, pathways, of course, to net zero emissions, transition to a cleaner economy, and of course, respect for human rights and continued adherence to international rules and norms. We've heard the Prime Minister speak about this extensively on his international trips, and this G7 will be no exception in that regard.
Lots to keep our eyes out for. Dr. Koukatsis, thank you for your time today. Thanks again for joining us on Forum Daily Week in Review, and we'll see you next time.